What can we learn from the great inflation of the 1980s? Ivy Zelman highlights that the institutional buyer is coming back to single family in a big, big way. FundRise CEO has a surprise announcement. Chicken Genius, a Tesla bull, has a new call on Tesla. And finally, folks, we got to talk about home flippers. This is the daily financial news for Christmas Day, December 25th. So, folks, great inflation, often referred to as the 1980s. This is where Paul Volcker came in and had to crush it. Baby boomers are talking about what happened, how to survive, how to profit, how to thrive in great inflation. 4 points were highlighted in this article that I wanted to share with you. One, buckle up for a long haul battle. Folks, the baby boomers who were interviewed in this article were highlighting that inflation was a decade problem. It is not a quick fix. You should be prepared for it to take longer than expected. Yes, it is very clear that our Federal Reserve today has learned lessons from the 70s and 80s, where we saw this with inflation. But again, as consumers, as individuals, as mom and dad who survived the great inflation, they are telling us, buckle up. Two, don't be in a rush to deploy cash or quote unquote buy the dip. If you buy the dip early and you're out of cash, you become the dip and you have to sell as you capitulate. Again, baby boomers are saying don't be in a rush. Three, conserve and build cash reserves wherever you can. Cash is not trash. Cash becomes your opportunity to buy as things get better. And then four, pay down your debt. Avoid credit card debt. Anything that is variable and short term, avoid. So this is advice from baby boomers who survived and thrived the great inflation of the late 70s and early 80s. Folks, let's talk about Ivy Zelman. Ivy Zelman is a wonderful analyst who does a lot of review about demographics and housing. She has highlighted that institutional investors are coming back to single family homes in a big, big way. She has highlighted at least $110 billion already secured, all ready to go for single family rentals. 30 billion of that 110 is already committed to projects, and they have enough capital for 400,000 single family homes already. This is the floor. It could go up from here as the 30-year mortgage rate comes in. We may see more and more institutional capital going to single family homes. And again, Ivy Zelman is, folks, there's $110 billion coming. Where is it going to go? Number three, FundRise CEO Ben Miller says the housing market is expected to come roaring back. Roaring back by mid-2023 as rates go to 5%. Wow. 5%. FundRise CEO, again, Ben Miller basically says, look at populations. 8 cities made up 50% of the population growth. Just 8 cities in the Southeast made that up. So again, FundRise CEO is calling for real estate to come roaring back by mid-2023. And just be very clear, when I hear roaring back, it's not price. Everybody wants to go to price. It's transactions. Transactions will come roaring back. Again, we're going to do around 4 million annualized units. Ben Miller is saying if rates get to 5%, he's actually saying when rates get to 5%. I don't know that they get there, but that's what he's saying. Real estate will come back. Number 4, I don't know if you guys follow Chicken Genius. It is somebody that I follow occasionally. I think he does some wonderful analysis, specifically around Tesla. He warned all of his followers that Tesla was going to fall to $140 a share months ago, quarters ago, earlier in the year. He took a lot of hate for that. Tesla now has crashed below 140. His new call, $60. Yes, folks, chicken genius, somebody who has 5% of his portfolio in Tesla, thinks that Tesla is going to $60. I am not, will not, won't be a part of that stock ever. I don't like cult stocks. But somebody who has real money, significant capital in the game, thinks that Tesla may bottom at $60 a share. And then number 5, folks, let's talk about home flippers. Home flippers are getting crushed today. In fact, you saw me and Jason do a video on this a couple weeks ago. I documented how the average flipper is losing money in Q3, likely will lose money in Q4. Flippers need to know a couple of things. 1, you are not very good. The market made you. 2, please take the small loss. Don't be like one of my friends who got crushed and ultimately went bankrupt because he didn't take the small loss. And then finally, buy better. If you follow my channel, you go through my property walkthroughs, you know there's about 9 months, maybe even 12 months where I did not do a flip. We bought 2 deals in the last 8 weeks. One of them was already back on the market. You have to buy better. Flipping works, but you have to buy better. Don't have an ego. The market made you. Be careful. Don't flip luxury. Right? Flip for first-time home buyer, FHA, VA buyers. So, folks, again, like, subscribe, comment, be a part of One Rental at a Time. We are about doing the work. We are about making moves in recessions. You can buy my book on Amazon, One Rental at a Time. It's got over 1,100 reviews. Thank you, thank you, thank you. Folks, this is the daily financial news for Sunday, Christmas Day, December 25th. Take care and bye-bye.